Welcome to Markets Now. I'm Michelle Rook with Scott Varilek with Kooima Kooima Varilek. Seeing a lot of green on the board this morning with the exception of a few wheat and deferred feeder cattle contracts. Well, Scott, yesterday felt like a risk-off day in the ag sector. Today it feels a little bit more risk-on. Cattle market trying to recover here, which is encouraging. Talk about technically what you see going on in that market right now and if we can go back and retest last week's highs or not.
Yeah, and thanks for having me. So we've got a bounce on a lot of these commodities today. Like you said, yesterday did feel like the commodity-wide selling with crude oil sharply lower and the Dow sharply lower and all the commodities down. So it did feel like that money flow kind of a feel, some of these funds liquidation on some of these markets. And so we're getting a little Tuesday rally here. So that's a decent sign. We're kind of back to trading. Okay, what is the real news? Yesterday, there might not have been something to talk about. So cattle themselves, and we look at the technical side, this nice, long, steady uptrend we've had, been overbought for several weeks. And now we've gotten back to some levels to where there's some resistance. We're looking at those 190 spots for the December futures for, a lot of these contracts. They're all sitting in the upper 180s where we're all just towing right below that 190 level. And I think that's kind of it. And we're wondering what's the news that we're going to need to push it through. So The funds have been strong, defending their position like they are again today here. We don't have any major chart damage to talk about. It's still this steady uptrend that we have. So we'll see if it wants to bump its head there at 190, but that's where I'm looking like we need to get through. There's going to be a few hedgers kind of looking to place some orders just below it, just to try to add some of that, because I think producers have been, happy to just kind of sell a few on the way up here, and that'll be your next target to try to look at. And then if we can get through 190, we're going to need some kind of news to get it to the 200 level, to the all-time highs. And it could happen. I think we're all sitting here hoping it can happen. And I don't know if I have the news right behind me right now that says we're going to get there immediately. It might take a little bit of a time, kind of like this steady grind that we've been on.
Yeah, like you said, we get profit taking and hedge pressure up at these higher levels. So we just kind of grind back up here. But the news that we might need is cash trade, and we've had 5 higher weeks. Do you think we'll be able to be higher again this week? I mean, the Packers bought over 91,000 head of negotiated cattle last week. Do they need any this week?
Yeah, there's been some big movement on these negotiated trades that we've seen, and it's been a really great feel to it, because we just have several Packers bidding. I hear bids from all of them, and some of the majors out bidding. We usually don't have that luxury as cash negotiators, that we have options to choose from and several bidding, and you're kind of searching here and there, and I get texts of several different Packers that are making trades, and that's a good, healthy market. That's a free market. That's what we're wanting. And I think that just shows, it goes to the tight numbers that we have, that they're all out looking for cattle. So, and I think producers are willing to sell. It's a great price. So that 187 is a great spot to sell. I mean, yeah, we're trying to maybe see if we have enough guts to hold out for some more, but it starts trickling and everybody just starts taking it because we're respecting that price. And I think as we have that big of a movement on tight numbers, I could easily see the Packer trying to pull back a little bit this week since they bought so many, trying to not show their cards and try to get us to put more weight on the cattle. That's probably what they're going to try to do. When they do buy cattle, they'll be buying them for next week or 2 weeks or 3 weeks, trying to buy them for a month out. They're trying to get as much inventory around them as possible. So it's just kind of a little eerie how the price is just real similar, that 187 for pick your week, basically, and some of those trades that we've seen. So I think the Packers still needs cattle. I don't think we're going to have to trade lower this week because everybody really, took a lot of those bids last week. So steady to higher is kind of my feel. I think we have the ability to do it. There's been several that thought steady to weaker, but I think with these futures staying on strong, proving that they're not looking to break, might give us a little confidence there to try to ask a little more.
Right. And with the box beef movement and the numbers or the prices going up there very strong, over $14 here in the last 10 sessions, Packers ought to be making money again, so they ought to be able to pay up, right?
Yeah, I kind of that little tiny violin that's been playing. I haven't heard it as much here in the last week, so that's a great sign. They slowed their chain speed down, trying to get these boxes to recover, and it worked. And boxed beef movement is good. We can kind of seasonally get a little boost out of that, get out of our end of summer lull that we have, and it still feels really strong here. Our demand has been rock solid all the way through for years, and I think beef's got a good product, and we're going to be able to keep it high priced and keep it moving. So I think there's just such a desire for consumers to eat high quality beef. So the next big movement for the beef industry will be to dial in on all these large exports or large imports that we have, versus the small exports, and how we can try to take value of the American product that we have. I kind of feel like that's the next target for the cattle industry to try to hit into.
Yeah, good point. We should mention we have had some deliveries against the October, right, in the live cattle.
Yes, we have. We've had this, positive basis for quite a while, and this is our first sign that we lost a little bit of the basis, and not really in a large fashion. Only it got right in line with cash, but there's been some deliveries at West Point. The rumors that I can relay is that it's maybe somebody with more of the thought that they want to try to break the market a little bit. They did get retendered. Nobody was interested in grabbing the cattle. Sitting here below 187, it doesn't look like there's any incentive to me. As I had said, all of the packers are out buying cattle. They're looking for cattle, and it's 187 from the southern Texas to North Dakota. So it's a great price, and the bids are there. So there shouldn't be any reason to try to deliver on the board. So it's a little bit of a head scratcher. I don't think the market's just panicking saying, oh, we got a bunch of deliveries coming. I think it's more one outfit looking for that break in the market.
You bet. And feeders this morning, little pressure or struggling a little bit to push to the plus side here with higher corn, but we're still at a discount to the cash index. So we should be pretty well supported there, right?
Cash feeders, I think they just prove rock solid. They're staying on, and feeders are the leaders. And that's what I see in the sale barns. Hearing prices, they're hanging on very strong. So that's just tight supply, and I think we can kind of look to that to say, okay, is this herd being rebuilt? Are there more numbers yet or not? And with these prices and how they're acting, telling me that we're still in pretty good hands and have a pretty strong floor, just with what these feeder prices are doing here.
And Hogs broke the uptrend line yesterday, but it seems like the funds buy on these breaks here, especially with the December contract. Now the lead month, it's at a pretty good discount. So will they keep buying?
Yeah, that's the hog head scratcher that we have. We break an uptrend line yesterday, closed below it, and you think, okay, maybe here is the opportunity for this market to break. Maybe it'll get a little scared, and you can just rocket ship right back higher today. So unfazed funds still defending that position, and we kill 490,000 a day, and we still are trying to figure out what cash hogs are actually worth. Due to confidentiality, there's been several days we haven't had a cash market. Yesterday we finally get some cash reported, and it's higher. It's still seasonally lower on the cash. We're still kind of riding that trend, but I think that was just a little bit of a surprise that it was, that much higher on the cash. October futures go off just above their LRP squeeze price. So that was, an easy spot for it to go. Surprised that these hogs are trading as good as they are. I continue to say that, but this is a market. Like I said, you have 490,000 a day, and you can't really figure out what the cash market is, and it's a cash settled market. So there's really no true tie to what we should be worth. So that's why we see these erratic trades and the wilds ups and downs, and making the hog market hard to trade like it is.
Yeah. Corn and soybeans, back to the plus side here. Obviously, we've kind of held some support areas, but the big news has been all this export business, all the flash reports and sales this morning. Obviously, we are finding some good value here at these prices.
Yeah, I think that's just the case. Finding some value. We've slipped a ways, probably on a little bit of chances of rain in South America, that we're going to have a lot of focus on that, and seeing some rains materialize, and they still probably have some catching up to do. So we still have to say, for me, that's going to be the lead dog and what we're going to have to look at. But on that break, a market that I guess I've kind of stood up and said, I don't think we have to make contract lows. I think the harvest lows are in and that we're going to be okay. So that's a little bit of a gut check when we start to head for those lows, in quick fashion. But we've seeing a little demand kick in. I think that's a great sign. A little boost for the market. Seeing some big sales on corn this morning. That's going to help us out. I just think that we have a product that's, we know the crop size is big, but we're at a price where we're going to start to find some of that end user buying. We're seeing that, and that's what we're going to need. We've got a lot of grain to go through. I think our harvest is well. I think we're in the over half mark by a ways now. It's been weather that you can just chew through it and go. So be safe out there. It's very dry out there, and it's been challenging. But I think we can recover a little bit on these grains on some of that end user news. And I don't know if it's something that's going to just rally on out. But you couldn't buy some of those deferred grains. You were looking at July corn at 450. There was a huge carry in the market. Now that it's corrected down to a level, say 430, a little more appealing. And I think end users are starting to notice some of those lower prices back there.
Do you think it is politically tied at all? I mean, is there fear by either Mexico or China about the election and about trade relations coming up here?
That's all certainly possible. So let's get this election over with. I'm ready for it. But yeah, if there's a lot of that talk that, okay, if we're going to be into some trade wars, what does that mean? You're starting to read more about that and say, okay, we could have soybean exports get absolutely waxed, or this trade agreement's going to get reworked. And we saw what happened the last time we had some major trade wars and really puffed our chest up, and prices were low and they stayed low for a long period of time. So I suppose that can stay in the back of your head a little bit, just kind of the worries, and maybe we'll price some of that in a little bit earlier, because we've seen this chapter already. We've read it, and maybe we'll know how to deal with it just a little bit more this next time. So it could be entering into the market. Yes.
All right. Thanks so much, Scott Varilek with Kooima Kooima Varilek. That is Markets Now.